Something huge is happening in the UK's rental market. And let's be clear, this isn't just some temporary blip. It's a deep structural shift, a great recalibration. In this explainer, we're going to break down exactly why it's happening and what it really means for millions of us.
So let's start with a number, 160,000. For years, this was just a projection, a warning of what could happen down the line. But as we head into 2025, it's not a forecast anymore. It's rapidly becoming the reality on the ground.
You know that landlord exodus people have been talking about for what feels like forever? Well, it's not a theory anymore. The data is in, and it confirms that a huge number of landlords are selling up and getting out of the market for good. And that, of course, brings us to the two really big questions. Why is this all happening right now? And what on earth are the consequences for the 11 million people who actually rent their homes in the UK? That's exactly what we're here to unpack. Look, we're not just talking about a few landlords having a change of heart here. This is a fundamental reshaping of the entire private rented sector, a great recalibration that's going to have some really long-term consequences.
Okay, so here's the hard data that shows what this exodus actually looks like. In the first quarter of 2025, a staggering 15.6% of all homes put up for sale in the UK were previously rental properties.
Now, to get a sense of just how fast this is all moving, get this. Just 1 year earlier, that same figure was only 9.8%. This isn't some slow, gradual shift. It's a sharp, accelerating wave of sales that shows landlords are heading for the exit, and they're doing it in a hurry.
But who exactly is selling up? And what does this all mean for the number of homes that are actually available for people to rent? Okay, let's get into the anatomy of this exodus.
The numbers here are, well, they're pretty stark. We're seeing a net loss of about 18,000 rental homes every single quarter. And here's the really crucial part. 97% of those homes are leaving the rental market entirely. They're being sold to people who will live in them, not rent them out. The result? The total stock of available rentals has just plummeted. It's now 23% below where it was before the pandemic.
So, who's leading the charge? Well, almost half are what you might call amateur landlords, selling their one and only rental property. But what's really telling is that 14% are portfolio landlords. These are the pros, liquidating 5 or more homes at once. That shows you that even the bigger, more experienced investors think the game has changed. And all of this is creating what experts are now calling the hollow middle. Think of it like this. At the very top of the market, you've got these shiny, new, and very expensive corporate-built apartment blocks. Down at the bottom, you have social housing, which we all know is chronically undersupplied. But it's that middle, the traditional family home, the flat above the shop, that's just vanishing as it gets sold off, creating this massive gap for working families.
So you have to ask, why is all of this happening right now? Well, landlords are caught in what you can only describe as a perfect storm of 3 converging pressures: new laws, punishing economics, and huge environmental costs on the horizon.
First up, there's the legislative hammer. The new Renters' Rights Act is being rolled out on an incredibly aggressive timeline. The one date everyone is watching is May 1st, 2026. They're calling it the Big Bang. It's a cliff edge where every single existing tenancy, no matter the contract, automatically flips over to the new system, overnight.
So what does that new system actually mean? Well, it's a total change in the way renting works. The old fixed-term contract, gone. Under the new rules, all tenancies are basically rolling contracts, which means tenants can give just 2 months' notice and leave at any point. For landlords, that certainty of a guaranteed income for 12 months just evaporates.
Then you've got the economic pressure. The era of cheap money is well and truly over. Average rates for buy-to-let mortgages are now hovering around 5%, and that just squeezes the profitability for any landlord who isn't an outright cash buyer. And to get even those slightly lower rates, landlords are now facing something called fee loading. Lenders are charging these massive upfront fees. We're talking 3 to 5% of the entire loan, which just gets added onto the mortgage. It helps them pass the bank's affordability tests in the short term, but it means they're borrowing more money just to get the loan, eroding their own equity from day one.
And the third pressure is environmental. By 2030, all rental properties have to meet a certain energy efficiency rating. For an older home, this could mean upgrades costing up to £15,000. So, faced with that huge future bill, a lot of landlords are simply choosing to sell those less efficient and often more affordable properties right now. So you hear all that, landlords losing control, facing rising costs, and you might be thinking, great, does this mean tenants are finally in the driver's seat?
Well, the reality is it's a lot more complicated than that.
The government insists it is not introducing rent caps. But if you look closely, the new rules for challenging rent increases have created a really powerful kind of backdoor system of soft rent control.
Here's how the risk has completely flipped. It used to be that if a tenant challenged a rent increase, a tribunal could actually raise the rent even higher. There was a risk involved. Under the new law, the tribunal can only confirm the proposed rent or lower it. It becomes a total one-way bet for tenants, which pretty much incentivizes them to challenge every single increase.
And this new system is creating specific crises, especially in student housing. The massive corporate student blocks have been given an exemption, so they can still use fixed-term contracts. But a private landlord? Nope. They're forced to use the new rolling tenancies, which creates total chaos with the academic year, forcing many to sell up and pushing students toward those more expensive corporate options.
The ultimate fallout is pretty clear. Despite these new protections for tenants, the shrinking supply is fueling inflation. And look where rents are rising fastest. It's not London anymore. It's places like the Northeast, at nearly 9%, because that's where the supply crunch is hitting hardest, in areas that used to be a lot more affordable. So, after all this, once the dust from this great recalibration finally settles, what is the future of renting in the UK actually going to look like? And this is the great irony of these reforms. For tenants who already have a home, their security is about to improve dramatically. But for anyone trying to get into the market, the challenge is shifting from keeping a home to the desperate search of simply finding one. Which leaves us with the ultimate question. The rental market is polarizing, splitting between these giant professional operators building premium flats and a rapidly shrinking supply of traditional private rentals. As that hollow middle widens, the question isn't just about rent prices anymore. It's about where an entire generation of people is actually going to live.